Hello and welcome to Commodity Culture, where we break down the commodities space for both new and experienced investors. Before we get started, standard disclaimer, nothing here is investing advice. Do your own due diligence. And today we have a returning guest to the program. It is Justin Huhn, the author of the Uranium Insider newsletter. Welcome to the program.
Happy to be here. Good to see you, Jesse. How are you?
Great and awesome to have you back again. I want to get started with your overall view of the uranium market as we sit here today. What are some of the recent developments and catalysts that you see that make you bullish on the sector right now?
I would say the elements of the sector's fundamentals that are having me bullish at the moment primarily have to do with what is going on across the entire fuel cycle, and that is primarily being driven by a bifurcated market due to Russia's invasion of Ukraine. So, the cutting off, let's say, of Russian conversion and enrichment in particular from the West, whether that's been through official sanctions or not, that it is actually happening. We are actually seeing that Western utilities are no longer contracting for Russian uranium, especially Russian enrichment. What that has caused has been a realignment in the sourcing of conversion and enrichment from the West by the West. And so what we're seeing is large jumps in both the conversion price and the enrichment price. And that is going to trickle down to the U3O8 price. And I can explain that further, but that's really the primary thing that has me, let's say, near-term bullish. Long-term bullish has to do everything with the way that the sector is moving in terms of support for nuclear. It's growing almost exclusively across the board, and looks very, very positive for the mid to long term for nuclear.
So I want to touch on the Russia-Ukraine conflict and how that's going to affect the sector. Now, Russia only produces about 5 to 6% of the world's uranium, but as you mentioned, they do a ton of conversion and enrichment. So how does that situation affect the overall market? And is there even the option of replacing that conversion and enrichment in the short term? How is that going to get done?
In the short term, no. The short answer is no. And yes, you're correct. They're not a huge player on the world stage in terms of U3O8 production, and much of that comes from joint ventures with Kazakhstan. But they are the largest player on the global stage for both conversion and enrichment. Over 40% of global enrichment, almost 40% of global conversion. So the West, let's say the OECD countries, we're seeing they have around 70% of the global nuclear fleet. So that is to say 70% of demand for nuclear products, for uranium and all the elements of the fuel cycle. But they only have about 40% of the global enrichment capacity. Conversion is looking like it's in an okay place in the West based on the demand coming from the West, at least for the time being. Going forward, it's going to improve as well. We have the ConverDyn's Metropolis plant in Illinois that is set to restart next year. Now, that was shut down in 2018, and that caused a pretty big jump up in conversion prices at the time. But that is already set to come back online within the next, let's say, 12 months or so. And that's going to help. We're hearing whispers that Springfields, which is a shuttered conversion facility in the UK, could also be considering restarting capacity. We saw a huge order for UF6 casks to be shipped to Europe. That news came out a few weeks ago. Excuse me, I've been a little bit sick, so my voice is a little bit raspy. And so that I don't know if that's the French that ordered those casks, and they're running probably at full capacity in terms of conversion now. But we've also heard from Cameco, who operates Port Hope, a conversion facility in Canada, that they seem to think that there's plenty of conversion capacity for the West. And so that's a really important element, because the enrichment capacity is a different story. Enrichment, there is insufficient enrichment in the West to meet the West demand. And even especially in the short term, which is why, in my opinion, we're seeing some leniency be granted to the sanctions that Canada has put against shipments of Russian uranium. so that the United States fleet can continue to receive that enriched uranium, at least for the short term. And now Canada has said, I believe they're allowing those shipments to happen until the end of calendar year 2023. And the reason is, without those shipments of Russian uranium, we literally would be short enrichment, and potentially to the point where some of the plants in the US in particular would not be able to operate. So, but what we can do in the West is the existing enrichment capacity can be synthetically expanded by raising the tails assays of the enrichment process. And so, to explain that as briefly as I can, basically, the way that uranium is enriched is it comes to the enrichment in feedstock as UF6, uranium hexafluoride. It's gas, it's essentially, that has been converted from U3O8, right, from the mined uranium. That UF6 is spun in a centrifuge, and in the centrifuge, the purpose of the spinning is to separate the U-235 and the U-238 isotopes. The U-235 isotope is the fissile isotope. That's the one we want more of to have this fissilable element be placed in the reactors, right? So that goes from 0.7% U-235, and we need to enrich that up to about 4.5% U-235. That's the enrichment process, okay? So when the centrifuge is spinning, the amount of energy and the amount of feedstock of UF6 that need to be dialed into that process are determined by the tails assay. And that is the percentage of U-235 that will remain in the waste product, the tails product of that process. So what the enrichers can do essentially is raise the tails assays and make it so that the the end result of that process, the waste material, the tails, will have more of the good stuff in it, which means they're running the material through faster. And the only way to do that is to have significantly more feedstock on the front end. So they can produce more enriched uranium with any given period of time, but they have to do so with higher tails assays, more feedstock on the front end, significantly greater demand for uranium. And that's what that calculation that I just very poorly described, that is the calculation that is happening right now, kind of behind the curtain, where utilities in the West are figuring out what is the conversion capacity over the next few years, what's the enrichment capacity. If we need uranium in 2025 to 2028, let's say, and we're talking with Urenco and figuring out what that contract looks like, what will the cost of SWU be, how much SWU will we need to contract for, and what will the tails assay be. And those elements together, along with what percentage will the EUP be for our reactor, for 4.4, 4.5, 4.6, whatever it might be. Some utilities are electing to go with higher enrichment levels because they can go for a longer period of time between refuelings. But all of those elements spit out a number of how much UF6 will have to be injected into that process on the front end. And so you have to understand what you're contracting enrichment for in terms of tails assays, and how much SWU you'll need. And that is going to tell you how much UF6 you'll need, which tells you how much U3O8 you'll have to buy. So the utilities are figuring this out now, which is why we're seeing the big jump in conversion enrichment prices. Once the utilities understand what the tails assays will be for their enrichment contracts for the periods of times they need to cover for their contracting, then they go and buy uranium to feed through that process. Because, and they have to buy the uranium now. This is just as an important point as understanding higher tails assays and overfeeding, right? Is that the utilities are going to have to buy uranium now. They cannot buy UF6 from the enrichers anymore. And so what happened in the past was the enrichers had so much excess capacity that they were spinning the tails down to very low tails assays, right? We're talking 0.18, 0.17, 0.16. Now we're already hearing that's already up to 0.25-ish, and the contracts are even higher, okay, for future enrichment. So the enrichers had excess capacity to the point where they could actually spin their centrifuges down to create the EUP that they had contracted for with the utility to a lower tails assay than what they contracted for, which means the utility signs this contract with an enricher. It's at a certain tails assay, and it tells them how much UF6 they have to provide. They provide that UF6. Well, if you're an enricher and you've got excess capacity, you'll spin it to a lower tails assay, use less of what the utility provided to you, and sell that excess into the spot market. That's underfeeding. That's been happening to the tune of 20 plus million pounds a year for the past 10 years. Okay. And last year it started to diminish a bit because we saw rising demand for enrichment, just generally speaking, with the resumption of a contracting cycle. But that's underfeeding. And the other aspect is tails re-enrichment. So if you have a lot of excess capacity as an enricher, you can actually take that tails material that's sitting in a pile, 0.17 U235, put it back in the centrifuge and spin it some more, and actually spin it back up to 0.7%, and you can sell that UF6 back into the spot market. So between tails re-enrichment and underfeeding, sorry to ramble on here, it's just a really important point. Those two elements were a huge source of uranium. And so if you're a utility and you can just go buy UF6 from an enricher, buy it from the spot market, buy it from a carry trader that's getting it from an enricher, you don't need to buy uranium. You don't have to go to Paladin or to Cameco or even to Kazatomprom or the Uzbeks or any of the traders and buy U308. You don't have to do that. You can buy enrichment for uranium. And so that has been happening a lot in the past decades. That's gone. So now that utilities have to contract for that conversion and enrichment for the period that they're uncovered going out into the future, right? Because most utilities are not uncovered in the short term. That's just not how the nuclear industry operates, right? But you're talking a couple of years down the road, and especially out into the end of the decade, you secure that enrichment, you secure that conversion, you have to go buy that uranium now. You cannot just go buy your UF6 from the enrichers. So this is a whole new world in terms of the fuel cycle, the contracting cycle that's coming. And it's very, very close right around the corner, in my opinion.
That was a great breakdown. Thank you so much for that. I do want to talk about Kazakhstan a little bit. Do you think they could find themselves caught in the middle of this economic war between Russia and the West? Do you think sanctions could affect them? We know they're the world's largest producer of uranium. Do you think this sanction and general negative sentiment towards Russia could kind of rub off on them as they are closely allied with Russia? And do you think that would result in them turning towards, China more and maybe the BRICS nations in terms of doing business moving forward?
I don't think that negative sentiment towards Russia is really affecting Kazakhstan that much. And that probably has to do with the fact that they're pretty publicly kind of planting their flag as not being in favor of what Russia is doing. So in terms of Western utilities still buying from Kazatomprom or their JVs with pounds being produced in Kazakhstan, because there's a lot of JVs there, right? There's a number of Chinese companies. There's Uranium One's a big JV, but they're from Russia. So obviously Western utilities not buying from Uranium One any longer. Orano has an important JV. Cameco has a JV there. The biggest thing right now that's affecting them is the transportation problems and having to deal with still their primary transportation route is through the port of St. Petersburg in Russia. But they have been working on an alternative route that goes west through the Caspian and the Black Sea. That, we really only get information about that from the messaging from Kazatomprom, and they're generally kind of telling the market that everything is fine. And I think we all know kind of everything's not fine. But I think that my friend Nick Jones on Twitter, he I think put it very intelligently that Kazakhstan is an unbelievably important source of uranium for China. So half of Kazatomprom's share of the production in Kazakhstan goes to China, half of it. Okay. They get a lot of uranium from Kazakhstan, and it's an absolutely crucial asset to China. So it's highly likely that if Russia puts Kazakhstan in their crosshairs, that they're going to hear from China. And in either way, Kazakhstan is really in this precarious geopolitical location, and having obviously historic ties to Russia doesn't make things any easier for them. But as of now, they are stating pretty clearly that they're not in favor of what Russia is doing. They're trying to distance themselves from Russia as much as they can. Will Russia put them in their targets at some point in the future? I really have no idea. It's a crucial asset for Russia as well. So it's really hard to say. I don't really know how it's going to pan out. But for the time being, they still are very much a Western-friendly country in terms of uranium production and sourcing uranium from the West. So we'll see where this goes in the future. But for now, they're doing their best to navigate these difficult waters, and I think they're doing a decent job of it.
People focus a lot on the spot price of uranium, especially investors, when they're looking at how the sector is doing. But I believe most of the business in the sector is done through long-term contracting. And I know it's often difficult to get a handle on the numbers there because there's NDAs attached to these contracts. It's opaque in that sense. But are there any signals you see out there that would indicate that we're seeing more long-term contracting happening at the moment and even more happening up ahead?
Definitely. So right now, year to date, there's been 75.6 million pounds officially contracted in long-term contracts of U3O8. And so I firmly believe we'll breach that 100 million pound mark for this year. And if we do, that will be the first time that we've had over 100 million pounds of U3O8 contracted in a year since 2012. So this is already this year, due to obvious reasons. Utilities are more actively seeking out term contracts. Now we hear also from Cameco, from Grant Isaac from Cameco, that there's more pounds under discussion for term contracts than they've seen since Fukushima. So that's more than a decade, right? And these discussions are really complex and complicated, and you wouldn't expect these things to happen quickly, other than in an outright panic for pounds, and that's not what we're seeing here. By design, nuclear utilities are relatively well covered. At a minimum, around 2 years in the United States and 3+ years in the EU. But some of the smart utilities are already covered, out through the bulk of this decade. But if you really put yourself in a position of a utility right now, what you want as a utility as much as possible is fixed pricing, because that's what you can budget around, right? You can plan around fixed pricing. If you know you're going to be paying this during these years, you can plan around that financially, right, with your budgeting. If you're a utility, or excuse me, if you're a producer, if you're a uranium producer, and let's just say you're Paladin, okay, and you're already in the process of restarting Langer Heinrich, and your capex costs were estimated to be 87 million pounds in November, and you just revised those to 117 million or 118 million pounds, up 30-something% in 8 months. So if you're Paladin and you're in a discussion with the utility, and you're going to be selling pounds in 2027, let's say, just throw that year out there, 2027, and you have to do a fixed price for that uranium, how much are you going to sell it for? I don't know. I mean, how fast are things changing now? What the heck is the world going to look like in 2027? How do you have any clue what your costs are going to be 5 years from now? Okay. So the producers are hesitant to lock in fixed pricing, and the contracts are going to have some blend of elements that appease the utility and give the producer what they want. And the market has shifted, especially in the context of nuclear, which moves very, very slowly traditionally in all elements of the fuel cycle. In the context of nuclear, the market has shifted lightning fast to a seller's market. So now you have Cameco really sitting in the catbird position here, saying, okay, we have pounds under discussion, more so than we have at any time since Fukushima. And utilities are out there wanting, okay, we want to lock in as much as we can fixed pricing. And I'm sitting here seeing 10% inflation, seeing labor costs skyrocket, seeing the cost of diesel fuel skyrocket. What is the world going to look like during the period of time that I'm discussing these contracts for? I have no idea what I'm going to sign these at. So are we going to see fixed prices with ceilings? Like you can say, market reference prices with ceilings. So the producers are wanting market reference as much as possible. Utilities are wanting fixed as much as possible. So it's a very complicated conversation that's happening right now, which is why it takes time for these contracts to be signed. And so we're more than likely going to see a lot more market reference contracts that are basically utility just pays essentially the spot price at the time of delivery, but the producer will oftentimes put a ceiling price in there. So maybe they'll put a ceiling of $85, $90 a pound or something like that. But the utility will have to pay up what the spot price is going to be at the time. And maybe they'll throw in a very small percentage of fixed just to make sure they cover their costs at whatever perceived cost they think might be at the time of delivery, or the time of production, I should say. But all of that is to say that, yes, the contracting cycle, it's here, and we're not waiting for it any longer. It's actually happening. 75 million pounds signed this year so far. A lot of contract discussions happening for the big players. And like I mentioned before, the utilities really are figuring out the conversion and enrichment first. That's primary. That's what's happening right now more than anything. So as soon as that is sorted and we understand, okay, Urenco is signing contracts for 2026 to 2030 at 0.3 tails assay, then the utility can go, okay, that's what we're going to pay for enrichment. We'll lock that in. Now we know how much uranium we need to buy. So that's all happening right now.
I wanted to get your opinion on jurisdiction, because we look at a place like the Athabasca Basin in Canada, well-established uranium mining jurisdiction, some of the highest grades on the planet, but a very slow permitting time. A lot of ESG red tape and those sorts of things means that it can take a very long time to get fully permitted and approved. I mean, I'm thinking of NextGen right now, which a lot of people think they won't even produce till 2030 or beyond because of those issues. And then you look at a place like Niger in Africa, where Global Atomic, GoviEx, obviously they're operating there, and also a fairly established uranium mining jurisdiction. I mean, Orano's been mining uranium there for 50 years, something like that. But it carries its own set of political risks. It's not a safe country to travel to. You've got war, you've got terrorism that can break out. Government corruption could be a problem, but you get less ESG mandates and a much faster permitting time. So which would you prefer as an investor, or do you think it's important to hold assets in a variety of jurisdictions geographically, just to kind of de-risk overall?
Yeah, I'm definitely a fan of diversifying across jurisdictions. Even we're dealing with uranium mining, so even in the safest, most supportive jurisdictions, it's still a fissile, material that's being pulled out of the ground. So there's always that element of risk to this sector. But yeah, no, I mean, like you mentioned, the process for permitting in Canada can definitely take a very long time. I mean, historically speaking, from discovery to production, we're talking 10, 15, 20 years sometimes. And that's not, the permitting process is not necessarily the reason for that length of time. It can be just the markets themselves, the capital markets, the actual price of uranium, et cetera, et cetera. But they are a jurisdiction that is currently, mining uranium. So that's something. There's a couple of jurisdictions in the United States that I think are very, very favorable. There's obviously Namibia, Niger, and Africa. So in Australia, certain states are very supportive, certain states not. So you really have to be careful. But yeah, I think diversification is a good thing across jurisdictions. I definitely do not like to gamble on jurisdiction. I don't really like to gamble generally speaking, but there's some plays that people really like that, if all of a sudden they get approved, then the stock will absolutely skyrocket. You have like Virginia Resources and, Berkeley, which has a very good deposit in Spain, which will probably never be a mine. But, if that shifts, then all of a sudden the stock does a 10x. It's like, okay, well, that's true, but it's just not my game to bet on these iffy jurisdictions.
So you mentioned the United States, you mentioned jurisdictions there. I'm probably going to assume you're talking Wyoming when you're talking about favorable jurisdictions there. There's been a lot of recent developments in the U.S. regarding growing political support for uranium and nuclear. There's a uranium reserve that the U.S. government has created, I believe, that apparently they're going to be buying domestically sourced pounds into, although I don't believe as of this time that there has been any pounds purchased. There's this Inflation Reduction Act, which has been passed, which is likely terrible for the overall economy. We're hearing about all these IRS agents being hired, etc. But it does include support for green energy, of which nuclear is now a part of. So are we going to see a real renaissance in American uranium production moving forward, or is it too early to tell at this time?
Well, I think that the Inflation Reduction Act, what an absolute joke of a name. I mean, yeah. I think that the biggest element of that bill that was passed has to do with support of existing nuclear reactors in the States. I don't necessarily think there's a lot in there to support uranium mining. The Strategic Uranium Reserve, whether or not that funding is included, I actually, to be honest, I'm not sure. I believe that it is. It's not a whole lot. It's not a meaningful amount of money or a meaningful amount of uranium. So not hugely supportive to uranium mining. Really what this bill is all about is clean energy production tax credits, and that is going to help support all existing nuclear reactors. So it's very, very important that nuclear is now included in the clean energy rhetoric, and as well as the funding. And so the fact that the nuclear reactors that are currently operating will now have some level of tax credit and financial support to continue to operate is huge for the largest fleet on the planet. So that's a very big deal. And it does look like there's also some other elements that where going forward we'll have, clean hydrogen production tax credits, clean electricity production tax credits, and both of these things can be supportive of small modular reactors and advanced nuclear. And so there isn't, I am absolutely not holding my breath for new large nuclear plants to be built in the United States. I don't think that's going to happen. I would love to be wrong, because despite the excitement and positive outlook for advanced nuclear reactors and small modular reactors, which is very positive and I am very excited about, I think that we absolutely should still be building larger reactors as well, even though they take a very long time and are very expensive in this country. But it does look like going forward, there will be financial support for the construction of small modular reactors. And that, I mean, this isn't tomorrow. We're not talking the next couple of years. Even towards the end of the decade, I think is optimistic. But this really is kind of the next wave. This is the revolutionary element of nuclear, and it's extremely exciting.
So I want to get into some specific investing questions with you now. And the first thing I want to touch on is share structure, because you mention it a lot. So I want to ask you, what is the importance of share structure? And when you're examining a company, can you explain how you evaluate share structure and what it is exactly you're looking for?
Well, the first thing I would look at, which is the most obvious, would be just the overall share count and outstanding shares and how the company arrived at that number. And so if it's relatively low, I'll look for a reverse split. If it's relatively low and I cannot find a reverse split, then you know that the company has has acted very, very conservatively in terms of issuing equity. Excuse me. Now, not all share issuance is dilutive, I should say. If a company can buy a very, very quality asset with shares, and if they did that during a period of time when the market was capitulating, then that was fantastic. That's not dilutive at all for shareholders. That's actually accretive. So you have to look at the share count and how they arrived there. And I like to go back and look at the raises that the company has done over the past few years. Look at how the money was allocated. Look at how generous the warrants were. Was it a full warrant? Was it a half warrant? How long was the expiration? How far out of the money? those sorts of things. I like to just kind of gauge an overall snapshot of how the company operates. And I think that some middle ground between conservatism and aggressive financial moves, somewhere in the middle, I think is really the sweet spot. A company that is overly conservative, that you have no idea what they're up to. They're not out talking to the public. They're not making moves in the market. I think can be a hindrance. Historically speaking, you want to have the 3 Ps, right? You want to have the people, the project, and the promotion. And if you don't have one of those, then typically the stock is not going to perform as well as it could. I also like to look at, in terms of share structure, the outstanding warrants and options, and how many of those there are relative to the total count of outstanding shares. And because the outstanding warrants are going to offer funding to the company when they get exercised, but at the same time, it can also be an overhang to the stock if there's too many outstanding warrants and options. And so, in the past, there have been companies that I was bullish on for certain reasons, but the share structure, like, they just had an unbelievable amount of, especially options, that were just given away and over and over and over to the team and to the major shareholders, and that weighed on the stock, absolutely weighed on the stock. Because of what you'll have people sell down the common share that they got in the raise and buy the warrant, and exercise the warrant, excuse me. But so that's really what I look for. Overall share count. I obviously look at the balance sheet, look at how the company operates fiscally, look at the overall G&A. I like to look at the salaries, and admittedly, I do own some companies where I have to hold my nose to look at the G&A. It's just, there's some companies that are operating like absolute pigs, and I'm not going to mention by name, but the share structure is important. It's important to look at these things, and you can't just look at the share count and be like, oh, well, it's Australia and they have, the Australians like the liquidity, and that's like how you explain 4 billion shares. It's like, you kind of have to figure out how the company got to that number and why it's okay or it's not.
So exit strategy is something that a lot of people believe is very important. You hear it being talked about, but that I think few investors in the uranium space actually spend a lot of time thinking about. They just think uranium's going to the moon. They're very focused on the thesis, which they're very bullish on, and for good reason. But they're not really sure when they're going to sell or trim positions or get out of the trade completely. So how do you personally formulate an exit strategy, and what are the factors that guide your decision there?
Well, I think that exit strategies really, honestly, are work in progress, because the story is always changing, and the elements of the trade are always changing. I think that to try to pin the perfect market top based on something that we're projecting now is pretty difficult to do, and possibly impossible to do. But I also would say that by the time we reach the top of the market, I don't plan on to sit on full positions. I think that how an investor positions themselves and trims on the way up is very, very important. I think that very simple rules of trading will apply to this trade as well, which are, when it's easy to buy, you buy. When it's easy to sell, you sell. And I'm not saying that's full positions, but over the past few months, it's been unbelievably easy to buy. There hasn't been a whole lot of buying pressure, and so the shares have been given away with sufficient liquidity for accumulation. And I think that when the market is raging and the shares are flying and the volumes are high, that's when it makes it easy to sell, right? And so that's what you should do. Now, do you exit those positions entirely? I mean, I really can't speak to what anyone should do with their own portfolio, because everybody is in a different place in the world, at a different age, with different goals, different risk tolerances. So it really depends on where you're at. Here in the United States, I have a very large difference between short and long-term capital gains. So I tend to trade less. I don't like to trade in and out. I generally try to accumulate at the lows and hold for the long term. With that said, what are some things I'll be looking for a market top? I would be looking for, first of all, a much, much higher price of uranium. We're now sitting, what, 47.50 a pound right now, and that's going to at least double. I feel very confident in saying that. I think we are going well above $100 a pound. So I think trying to time a market top before we get there, you're probably not going to see the top of the market. I think that obviously we have to watch the charts very close and look at volumes into the stocks that are institutionally driven, and that would be SPUT, that would be Cameco, that would be Kazatomprom. And to some extent, ETFs. Now, the ETFs, I believe, are majority retail owned, and SPUT's majority institutional owned. But you're going to have to watch for that, for technical signals in the charts as well. I think in the same way that bear markets are typically marked by high volume capitulative bottom, bull markets are typically marked by very high volume exuberant tops. And so you'll be wanting to watch for the spot price of uranium drastically overshoot the term price. And right now, the spot price is actually below the term price slightly. So once we are in a real serious run for U308, we're going to see both the term price and the spot price move up in tandem again. And if you zoom out, that's still perfectly intact in terms of a long-term direction for both spot and term. But if you see the spot price, if they're both moving up like this and then the spot price goes like that, that's probably a sign that you're approaching a top. So that's something that's important to look for. And, it's one of the big signs in the previous market I don't think is going to be there this market. And that was hedge funds selling uranium, because hedge funds just own SPUT now. There were some funds that did buy up physical uranium, but as soon as SPUT was online, they sold their pounds to Sprott in exchange for trust units. And, why hold uranium on the books if you can hold, highly liquid, trust units? So that signal is not going to be there. But, there's also could just be some fundamental piece of news that comes at a time when spot overshoots term. So once that is there, then you're going to be wanting to watch the news flow very closely and have something. Maybe the market goes back from bifurcation and all of a sudden, there's peace between, Russia and Ukraine in the West. And that, who knows, that could come at a time during an overshoot that could mark the top. There's really so many things to speculate on that could mark a top. It's kind of pointless to even do. But generally speaking, you want to be buying when the buying is easy and selling when the selling is easy.
So you focus on uranium. You're one of the best in the business at it, but I am interested to know if there's any other commodities right now that are catching your eye and that you're bullish on.
Honestly, following this is pretty overwhelming in terms of my time allocation. And I also believe, based on what I've seen amongst other commodities, that uranium is headed for an extremely strong next few years. So I'm mainly focused there. I think that to the extent that we see a recessionary pullback in oil and or natural gas, that's probably a pretty strong buy the dip opportunity. I'm looking at that for sure. I think in the long term, copper is probably a good play. I'm very intrigued by the aluminum market. Interestingly enough, from what I can tell, the supply side of the aluminum market is basically broken. So that looks really interesting. There's a number of commodities that are just kind of on the fringes that I would love to look into more deeply if I had more time to do so. But as far as I think that for fundamental investments, conviction is crucial. So for me, the fact that while there are all of these other opportunities that very well could be fantastic, I feel very confident in the uranium trade and I understand it the best. And so that's where I have the bulk of my investable wealth. I think that people are giving up on gold and silver, and that makes me believe that it's going to have a really, really strong run. And I don't know when it happens. I don't know if it happens next week, next month, next year, 2 years from now. I have no idea. But I know that like precious metals will have their day. They'll definitely have their day in the sun, and it's going to be an epic run. And so I do own some of that just to hold for the long term. but generally speaking, I mean, the setup for uranium here is just absolutely unreal. I mean, I can't even believe everything that's happened over the past 18 months to set this up, and now we're actually seeing like California keep their nuclear plants online. It's like, I can't even believe it. Can't believe what I'm reading on a daily basis. It's really, really exciting.
Yeah, the thesis just keeps getting stronger every day. Thank you so much for coming on the show and sharing all your knowledge with us. For those of us who want to hear more or learn about the Uranium Insider newsletter, where can they find that online?
uraniuminsider.com. I'm also on Twitter pretty frequently. I also do a daily podcast called the Uranium Market Minute. Haven't done it for the past week. I'll be doing it today again because I've been sick. But yeah, I'm pretty accessible through either the website, uraniuminsider.com, or on Twitter.
Awesome. I'll put links to that in the description below so people can find it. Thank you so much for coming back on, and we'll have to have you on again in the future.
Thanks, Jesse. It's my pleasure. Anytime.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.